Welcome back, guys, to another Zero DTE video, and today Ernie's going to be talking about building wealth, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy, guys.
First of all, it really depends on what your goals are with your wealth and what you want to do with it for yourself and also as a legacy, and also your ability to accumulate it and how much you have. All of that is going to be really determining what you can do. What are your options? And also, what your age is and what's your time horizon. And that's going to make a big difference too. That's the most general answer. Let's take maybe one that's a little bit less general and just talk about an overall strategy. Of course, you want to employ a strategy that will protect you in the widest possible array of market types and also give you the best chance for growing. And in my view, like an offshoot of the same strategy that we use that is built off of this sort of Austrian economic model, this roundabout strategy and taking advantage of events as they come is perhaps the most natural way to go. And there is a name for that. There's a couple of names for it and different variations of it. One that Nassim Taleb has touted is called the Barbell strategy. And that's where you take maybe 80 to 90% of most of your assets and you put them into ultra-conservative type of assets that are very resilient to huge swings in the market and different inflation and regimes and all this other stuff that's super conservative. And then the remainder, what you're talking about, is that's what you use as your trading capital, your speculative capital. That way you have the growth aspect and then you have the keep up with inflation aspect. I'll tell you what I have. It's in predominantly interest accruing or income producing assets. But not all income producing assets, but it could be in things like cash is obviously not an income producing asset, and hard assets like precious metals is not income producing, but it does provide a way to keep up with the overall inflationary aspects of the economy. But that's really long term, like precious metals, gold, or other investment grade collectibles, for instance, is another thing. Real estate, income producing real estate is another big thing that you would put into that bigger thing. But again, it really depends on what you have and what you're willing to buy and maintain.
But that you're talking about valuables, things that are expected to be more valuable tomorrow than today.
Right.
So cash is not. Cash is expected to be worth less tomorrow than today. It's not where you want your money.
Right.
Yep.
You always need some amount of cash though for fungibility and to be able to react.
But you can keep that cash in your account.
Yes, but generally you want hard assets that can produce income. That could be a whole range of things, but real estate is probably the most effective. Treasuries or CDs and things like that can do that. Annuities, bonds are all good things to have in your big pile. And then the small pile, you make it speculative, those things that could really blow up. Stocks that you think that have 10x capability. Trading this strategy. That's what should be in the smaller part. Then I can talk about strategies for how you would treat some of those investment grade or income producing things. One mistake a lot of people make over time is that they buy property and maybe buy a second home or an investment home. And then when it gets to be a certain amount or whatever, they decide to sell it, which is probably one of the worst possible things you could do. Never sell, just accumulate. But accumulating assets, particularly ones that are income producing, is your number one goal in terms of your overall wealth.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.